Let's get it. Let's go. Let's go. Yo, good morning. Welcome to the Morning Market Report. Guys, this is the Piper Academy channel. We're breaking down the news, the macro, the why are we dumping candles right there, right there. We're catching support in the golden pocket. We're going to talk about maybe this not holding. Why are the markets pulling back today? It has to do with Oracle AI. Some analysts saying that it still has another 40% downside to move. And then, of course, we got some geopolitical tensions going on. All Russia in the news today. Guys, we're going to be taking a look at all of this, going to be breaking down what's going on with the charts, talking about some levels that you need to be keeping an eye on, and a whole lot more right here today on the Morning Market Report. You guys know what time it is. Take your seats. Class is in session. Let's get it. See you on the other side. Let's go. Good morning, everyone, and welcome to the Morning Market Report. So glad to have everyone here. Shout out to all of the Otter gang coming over. Appreciate you guys and all of the alumni that are here every morning, just taking their seats, ready to learn and get educated. Shout out to Crypto Billy. Shout out to WixWife Fine 89, Steve Hickey. I see you all, and here comes the Otter gang kicking down the door. Let's go ahead and bring up the co-host. That is the OC guy. What's up, man? How you doing today, OC? How you feeling?
Oh, I'm feeling fantastic. I'm right now fixing my audio because I think we're gonna need a lot of dramatic booms and whams this week.
Booms, whams, and womp womps. Here, I got the womp womp. There we go. We got you guys. Welcome everyone. Let's go ahead, OC. Let's talk about what's going on with Bitcoin real fast. I'll kick it over to you. I'll follow up on it, and then we'll get into the news. We got a lot of stuff to unpack today. So let's go ahead and get that while everyone's coming in. AIXBT Crypto, what's up, bro? He said, gang, indeed. Good Otter, sir. He said he's the King Beaver, Lord Otter, King Beaver. So that's, shout out to him. All right, what do you got on the chart, OC? Let's jump into it, man.
All right, so let's take a look at here. And long and behold, well, we did hit a little bit higher. Remember on this short that we were looking for, and I hate this because, guys, I mean, come on, we knew the direction, right? We speculated on the direction. The direction was correct. Our stop loss was a little short, and our entry was a slightly bit earlier. Just so you know, as we always do. All right, let's go and check that out. This is going to be a quick reminder of what I always draw in here. But let's do it once again. So we have a range, all right, or in this case, we have a megaphone or a broadening wedge, all right? So we have that broadening wedge. Let's go like that. So when you have a fake out or a breakout on a range and you close back in, the chances for it to hit the other side, they go parabolic. All right. The same thing happens with any other pattern, right? Triangular patterns, sideways patterns, rising patterns, any kind of patterns, right? So you have the price action and then you have the fake out right here, right there. When we break back inside, when we have acceptance back into the range or into whatever the pattern, well, the chances for hitting the other way around or the other side, they go parabolic. And that's exactly what happened here. So your entry was back at the same exact area right here. I would say that looking into this zone, and well, then the actual closing of the candle was in here. So whatever area that you have chosen right now. So if you did take that short, once again, remember I mentioned If I get stopped out, I'm going to keep looking for that reentry. And not only in here, we also were looking into Ethereum. We were also looking into Link, into XRP, so on and so forth. So far, let's go. I mean, we're hitting the bottom of the pattern. Let me just unlock that and extend it. In fact, it was something like that. But now that we have more than 3 touches, I think it's safe to say that we can go for the actual wicks in here, which is going to make it a little bit more precise, I would say. And guys, I think we have a little bit more to go because we have, and look at that, we were expecting that rejection right here, right? Not only that, we were expecting that rejection right here, right? And we did get it a little bit higher, I mean, a little bit lower, but we did had it since yesterday. So yeah, I mean, everything is kind of like falling into pieces. And I will say that I like it. I like it. All right. So be prepared. I think there's more downside to come. What I'm going to be looking for at this moment is going to be somewhere around these areas. I'm going to be looking for an early flip of the ribbon, creating right here a higher low. Same thing goes in here, a higher low, and then taking us back to previous highs. And finally, making the big movement to the downside. Be careful at this point because dramatically, I mean, we could actually go for the center of the pattern and not even get to the top. I'm just aiming at the top because that is what makes sense to actually do for a good pattern to break out for a book like pattern. But we also know that the center, it is a known resistance, right? So we could also do something like this. And I was talking about Piper and telling him, hey, you know what? Will be very scary, but I will also look like is having a candle of death, right? I mean, that will be a little scary, but going all the way to 100K to 106, that was something that yeah, I would kind of like, because that will create, I mean, a fast moving, all right, a very fast movement, right, will be creating some divergences. And those divergences, well, then they will be added for a possible reversal. It's still creating a higher low, I mean, lower low, but then opening the opportunity to then create a lower high. So that's what I'm seeing right now. And well, let's keep it calm and let's be a little careful right now in the markets.
Absolutely. I'm going to break down what I'm seeing here on the chart also before we jump into the news. But I want to jump over, give a shout out. We got like 189 people here on YouTube watching right now. And then we got another like 15 on X right now. So shout out to everybody that's in the chat right now. Alexander G, the Mod Queen, BC Port Corp, Steve Hickey's in here, Mike Vollmer, JR, Harp. Like we got a ton of people, man. Shout out to everybody. Appreciate you guys all being here. I saw Crypto Billy. He said, let's break it down. And then also we got not a super chat, a gifted membership from BC Port Corp that got dropped also. So to the new member, welcome. Make sure you get over and check out the Piper Plan DCA. It's only $5 a month, man. And we break down every single Monday how much of a multiplier for your DCA you should be getting into. So let's go check out this Bitcoin chart and see what I'm seeing on here. And then we'll come back and break down the news for you guys. We got a lot of news in today. We got some data and some geopolitical stuff to go over, plus an article talking about $90,000 and $70,000 Bitcoin. Brace yourself for that. Let's talk about that here in a minute. All right, looking at the Bitcoin chart right now, guys. Some interesting levels here. If you take this, why is my chart not moving? Let me refresh. My mouse does not want to connect. There we go, mouse off. All right, if you take a look at this chart here that we have, guys, and as soon as my mouse reconnects, there we go. Perfect. This whole Fibonacci setup here was pulled off of the low that we had back here on August 31st. It came in at the top here that we had here, a double top actually, with a little swing fail pattern. Happened on 18 September, and that's what this fib is being pulled off of. Let's get rid of the Mexican spaghetti. There we go. And we can see here yesterday, we came up on a nice run. We had a bounce out of the golden pocket, came up right through the 50% fib. No problem, no harm, no foul. Said, I'm out of here. And it reversed right beneath the dynamic reactor from chart prime on the 4-hour, hitting the 382, and then down she comes. You can see now we're getting buying pressure coming in. We've got a nice doji candle here right now. If you guys don't know what a doji is, it's where you have the wick on top and the wick on the bottom. Shout out to the wicks. You get this body in the middle, right? This little body in the center here. That is called a doji candle. And it's a candle of uncertainty, if you guys don't know. Right now, we're trying to hold the golden pocket, the 0.618 fib to the 0.66 fib. If you guys want those levels, there you go. You guys come back here, screenshot that. But that's the levels I use for those. Looking at this on the platinum pocket, this is the level that I do think if we don't hold this golden pocket, and very likely we will be heading down to here, because you can see on the volume node here, guys, not a lot of volume. We got a big volume right here where we're at. You can see it slightly grayed out here behind, but then it just falls all the way down into here. And this is our next volume node, is sitting right inside of the platinum pocket. That's going to be 109.5 to 108.4 in that ballpark there. I think that's what needs to happen. I'm not seeing any strength right now on the 4-hour oscillator. Money flow is coming down. Volume is coming down. Oscillator ribbon is coming down. True 7 is coming down. And we're not getting any bottom indication here on the power bar. Let's jump over to the daily and talk about this too, because here we can see on the daily that we rejected right here off the 100-day simple moving average. And that gave us our downside move. Now, some bullish news here for you. We are wicking onto the daily dynamic reactor right now. Last time we hit this, we did hit the golden pocket, but you see all the candles closed where? Inside of the dynamic reactor, right above that 0.618. If we don't hold this, watch for this level again, because there's a good amount of volume right here. Again, though, I do think we're going to probably pay a visit down here to the quantum reactor and down to the 200 and the 200 and 300, 786. That would be about 103. I think that's very possible. Why do I think that? Because we have triggered a sell ribbon here on the MVP oscillator. That's the Mike Victor Papa indicator, is part of the Oscillator Pro Plus. But if you go here, you can put it on MVP oscillator. And this does really well on calling out bottoms of moves, right? You can see here all this green, that was all of this here, right? We had it here, and that was all of this here. We had it here, and that was all of this here. And guys, these moves, to be fair, let me turn off the magnet so I can grab them. These moves were like 10.4% move to the upside. This was a 4.3% move to the upside. This one here was a 9.10% move to the upside. Okay, decent moves. If you're looking at swing trades, 5x leverage, you're talking 50, 60% there. Looking at what we see on here right now, though, no green candles. That's what I showed on the thumbnail today. Plus the fact that this just fired off, we tend to get decent plays out of this. Look, this fired here, and it had all of this move to the downside. It fired here, right there, and it had all this move to the downside. So we do tend to get pretty decent sell-offs when this thing fires off, especially when it fires off from at least a mid-level or higher. And this fired about 20 points on the oscillator, 20 points above the zero line. So I think that we could see this, hopefully hold here. I mean, that is a possibility. But when we look at the daily indicators, histogram coming down, volume coming down, money flow holding kind of steady on the daily compared to the 4-hour, and we are getting close to the RSI on the bottom. But guys, this thing can dump all the way down to like the 9 and 10 levels, and right now we're only at like 30 on the RSI primed here, free indicator from Chart Prime. Also, you guys can throw it on your chart, don't even have to pay for it. It's beautiful. So watching this dynamic reactor right now, going to be a key level again on the 4 hours, coming in right at our golden pocket. We are getting a nice bounce off of this wick to the bottom side. Bulls absorbing all of the bearish pressure on this candle for right now. But we're going to break down some other stuff in the news and talk about why we might see a little bit more of a downside move. OC daily compared to the 4-hour, daily looking a little more bearish in my opinion, despite being at that level that is hitting the daily dynamic reactor. I am going to show the bull market support band here a little bit later too. That's given us another level of support. But if we lose that, we're looking at the 52-week SMA. Your thoughts on that, on lower, or do you think that we're going to hold this level right now?
Well, if you ask me, I think that we're gonna have a reaction right here on this level. A little bit on a reaction is gonna trap some people like in a bull trap for lower
Mhm.
time frames, 4 hours, 1 hour, 30 minutes. And then as I was maybe thinking that we could be having that candle of death going straight downwards, losing the support. So I do believe that we have more downside. We need, and I mean, I'm happy with this downside because only up is just not possible. We need to cool down, right? We need to cool off. And if we're looking or expecting, I would say if we're actually expecting a higher high on December or even on November, well, then we need to find those cool down zones, right? And I see liquidity right down there, right? Right around 100K, 108, 106, right here, 109, 108, 16, and 100K. So is really the liquidity that we've been hunting. Hopefully it is, right? And then finally having that uh, big V-shaped recovery that will take us back to where we were. I mean, this is not something impossible. I mean, look at this drop and look at this V-shaped recovery, right? Let's go for that. And well, that could actually happen right here. Look at that. And hitting the 103, 10 something, and then getting back at where that dynamic reactor would be at 113. And I'm not even going for the actual price, because if I go to the actual price, it would be like a little bit lower, right? Going back up in here, and that V-shaped recovery will be actually creating some bullish patterns in here, going for a higher low and finally breaking through. And that cavalcade goes over around October the 16th. So pushing to November, maybe higher highs. I think this will be a cool retracement to take advantage of.
Yeah, absolutely. And we talked about that 3 weeks ago, maybe even a month ago. I said, look, September is probably going to be a down month. October is where we're going to get our rally. End of October into beginning of November will be in the window of the end, and I'll show that on the chart here in a little bit. Let's go ahead and jump over to the news though, and let's get that. If you guys haven't done so yet, man, help us out, smash that like, and we'll make sure that we try to keep our stream from collapsing. How about that? I appreciate you guys. Let's jump over, talk about the news. All the metrics here from Into the Cryptoverse, link down below. Guys, Into the Cryptoverse has risk indicator right now. We're running a 30% risk band. Summary on this is at 30.2. Price is giving us about a 40% risk band. And on chain, we're at a 50%. We're hitting above the 50% threshold here. What about the crypto market cap? Well, it's sitting at 3.811 trillion right now. Trend line on this is at $4.407 trillion. Undervaluation right now is 13.52, and it's getting further and further away from that threshold median there, which is coming in right now at, again, 4.407 trillion. What about the wristbands? Bitcoin wristbands at 53.3. We're still at a 2x DCA, but I do think that if we head a little bit lower, this is probably going to drop into a multiplier times 3 on a DCA Piper plan. I do want to point this out. Guys, we have in our Piper Plan DCA on the Discord, $5. Again, it's only $5. What we have is the weekly drop in of 2x, and I had not DCA'd this week. I did buy this morning, so don't get it twisted. I think that we're going lower. Very likely could be heading a little bit lower here, but I am still taking advantage of these prices when it comes to Bitcoin. Altcoins, not so much right now. They're going to get sold off much harder if we do see more downside, but I absolutely picked up $2,000 in Bitcoin this morning. So buying it every single week. If we head into the times 3 wristband, don't think that I won't be picking up 3x on that multiplier for the week and pick up $3,000 in Bitcoin. So always am looking at these charts to figure out where's the opportunity as well as the support, right? So let's go ahead and jump into the alt season index. How are we looking there? Let's refresh it and see. Alt season index, we are at 73.3% right now. Currently not Bitcoin or altcoin season. Bitcoin still has 16 altcoins out there that do not have as much of an ROI. So therefore, we have rejected out of our red box here for alt season. Look at the liquidations in the past 24 hours. In the past 24 hours, 172,414 traders were liquidated. Total liquidations coming in at 589.06 million. Largest single liquidation was on Hyperliquid. It was an ETH trade. FETH, $29.12 million, OC. Good Lord. All right, let's talk about X marks the spot here, guys. Bitcoin Fear and Greed Index right now sitting at 44. It's in neutral, not quite in fear yet either, guys. Another indicator telling me we might go down a little lower because typically we need to hit that fear before we really get pumpy again, right? Ethereum sitting at 40 on its Fear and Greed Index, sitting at neutral right now. And then the geopolitical stuff I was talking about, it's right here for you guys. Skies are heating up. Let's open that up. Skies are heating up. NATO's route, if necessary, we have the right to shoot down Russia jets. That's what they're putting out over there. U.S. just deployed fighters against Russian bombers, according to CNN, and NORAD confirms Russian aircraft have entered Alaska air zone. Tensions are sky high. Are we on the brink of a direct NATO-Russia clash? Markets are reacting. And then Poland. If you guys don't know, Poland and Canada are pretty much the reason we have the Geneva Convention. These guys get medieval when it's time. Yes, Canada. I know. It's crazy, right? Poland is preparing to amend its law on military deployments abroad to allow its forces to shoot down hostile objects launched by Russia, such as drones and missiles, over Ukraine without prior approval from NATO or the European Union. They're just YOLO. That's what they're going to do. They're going to do it on their own. No permission needed. Poland. Canada, calm down up there. We don't need you getting all up with Poland there too. And then we'll talk about this here in a little bit. This is a chart from Ansem talking about some levels here of support. We'll take a look at this here in a bit. Was there anything else today? Yeah. Crypto breaking news. This is from 17 hours ago. Senate Finance hearing on crypto taxes. This is for the U.S. on October 1st, 10 a.m. Eastern Standard Time. DC is going to debate on how your staking, trading, and reporting get taxed. Eyes on this one, guys. This is all happening on October 1st, so this could be a bullish catalyst or another bearish catalyst, or even a buy the rumor, sell the news. Who knows? Flip a coin. We're just going to keep buying Bitcoin. So all on October 1st. And then the last piece of news here. KBC letter, individual investors' cash levels are low. Retail investors' allocation to cash was 16.5% in August, one of the lowest readings in 4 years. This percentage has fallen by 3.2 points since April. By comparison, the long-term average has been approximately 22%. Individual investors now hold 67.3% of their cash in stocks, just below the June 2024 multi-year peak, which is at 70.5. They also hold about 16.2% of their capital in bonds, roughly in line with the readings over the last 4 years. Retail investors are all in on this market. If we start to see pullbacks, what this means, let's talk about that for a second. Let me go to crypto bubbles here so that's there when we come back. What this means is that if we start to see market sell off and it just keeps selling, right? We could see a trigger effect of shorts liquidating shorts, right? And so it just hits stop losses, it hits selling points, it hits all these limit orders, right? And we could just see the collapse level, which would give OC his death candle. But you guys need to be aware, that's how many people are invested right now. And I do believe 100%, if you're not invested in assets in the next 10 years, you will be absolutely broke. You'll be on the wrong side of that poverty threshold. I promise you guys. Just my humble opinion, but I think that the assets are going to be the only thing that is outrunning the degrade of the purchasing power of the U.S. dollar. And we've seen that. I talked about this yesterday. If you look at the euro versus Bitcoin, hasn't made a new all-time high since January. What's made Bitcoin hit a new high is how many more dollars it takes to buy Bitcoin. Not because Bitcoin's gone up, but because the value of the dollar has gone down. So, you need those assets. Right now, though, stock market might be a little overexposed if we do get a pullback. I just wanted to bring that up here and talk about it. Let's jump back into the news. Let's finish up on this. Looking at the crypto bubbles, guys. Right now, Bitcoin down 1.2% on the daily, on the hourly, trying to make a little bounce back here. Again, that's on that golden pocket that we showed you at the beginning. Ethereum's down 3.7%. XRP's down only 1.1%, guys. XRP holding up quite well in relation to alt versus Bitcoin right now. BNB is down 1.4, also holding up well. Solana's down 4.7. Big movers. Dogecoin down 5.3%. Avalanche got caught in the avalanche and is down 11.5%. But you can see some of these alts are holding up fairly decent. Stellar Lumens, of course, right in line with what we always talk about. XRP, right? Getting that play on that. Hyperliquid was down 7.4% today, losing 2 spots here in the top 20. SWE is down 4.4%. Rounding out the bottom 20 here, holding up pretty decent right now, down 1.8 is Litecoin in the number 20 spot. But I do want to point out Tether, guys, back into number 3. XRP, despite XRP holding up well, Tether is still back in the number 3 spot. We're seeing a lot of printing on Tether and USDC right now. They're getting a lot of stable coins ready. And historically, when you see that happening, it means that people are going to come and grab a lot of stable coins here soon, meaning they're getting out of other stuff. So all of these things are factors we got to watch, to include grabbing a cup of coffee in the middle of a sentence. So, stock market, how's it looking today? NASDAQ was down like 1.4% this morning. Now it's only down about 0.5%. S&P is down 0.36. Dow Jones almost flat and neutral at 0.09, but the volatility index closing in on that 17 score where we get really crazy price action going on, it is up 3% today. Overnight, European markets, all in the red. Why? A lot of tension over there going on with Russia right now. Look at the Asia markets. Nifty 50, HSI, Shanghai, all in the red. Japan market and ASX 200, the only two that were in the green, and it was only slightly. Bonds market, 10-year yield. Guys, it's back to almost 4.2 again. We're almost back to our baseline that we like to ride at, not getting a lowering of this 10-year yield despite rate cuts going on. Oil, Brent, and the RBOB gas both down in the all 3 down in the red. Natural gas in the USLD HO is in the green. How about gold? 37.57 today, guys, down about 0.27%. Sitting at $3,757, holding above the 3,700 pretty well. I do think it's going to go back to 3,800, especially if we see geopolitical tensions continuing to rear its ugly head. Looking at silver, I told you $50 is coming, guys. It's at $44.60 today. Did break $45 yesterday, up almost a full percent today. Copper down about 1%, and platinum and palladium both moving to the upside, pretty much neck and neck for the rise today. 1.35 for platinum and 1.64 for palladium. Let's go talk about the economic data that came out this morning, because if you don't know, you need to know. Durable goods came out this morning, month over month. Guys, had a revision here down to negative 2.7, was previously at negative 2.8, so got 0.1% better. They thought it was going to come in negative 0.5, negative 0.7 on the forecast. Guys, came in positive 2.9. That is a solid durable goods order there for month over month. Again, if you don't know what durable goods orders is, durable goods orders has to do with things like refrigerators, furniture, things that last 3 years or longer. If you look around your house and you go, that is furniture, durable goods, they last, right? Well, they should at least. If they don't, quit buying Walmart brand stuff. But yeah, that's durable goods orders. GDP growth rate, quarter over quarter final. This is our final for the second quarter. Came in, was at negative 0.6. This is a revision, was negative 0.5. This got 0.1% worse. They thought it was going to come in at 3.3, being, hey, look, quarter 2, we're good, we're solid. What it do? Came in at positive 3.8, seeing some strength there on the GDP also. Durable goods orders, excluding transportation, was at 1%. This is also a revision, go figure. Shocker. This was at 1.1%, came down 0.1% to 1%. I thought it was going to be flat and neutral, came in positive 0.4. So excluding transportation out of there, durable goods looking decent there too. GDP price index came in better than expected. Goods trade balance, they thought it was going to be negative 95 billion, negative 93 billion, came in at negative 85 billion. Better than expected. How about initial jobless claims? Was it 232,000 for the week? This is weekly unemployment filings. 235,000 to 240,000 with the expectation, meaning they thought it was actually going to go up. More unemployment filings this week. Guys, came in lower. So everything that they expected to be really bad today came in better than expected. Even existing home sales was at 4.01 million. They thought it was going to be 3.96. Came in at 4 million, in line with the forecast. So we are seeing shift here in some of this stuff. But I do want to point out, I pulled up Chat GPT and I said, okay, let's talk about this. What does this all mean? Because could we be looking at this from the perspective of people are paying more, not necessarily buying more? And she squared me away here. She said the PCE price index is a key inflation measurement used by the BEA. Core PCE, excluding food and energy, has been stuck above 2% and is viewed as a cleaner signal. As far as the CPI, where's it at? I think it's in here. Based on inflation, could this be Americans are just spending more? She said, exactly. You nailed the key nuance here. What you're picking up on is the difference between nominal spending and real spending, inflation adjusted. Nominal consumer spending, the raw dollar amount households shell out. If inflation is high, people can spend more dollars, but not actually consume more goods and services. Real consumer spending adjusts for inflation to measure the actual quantity of goods and services purchased. The numbers you cited are already real inflation adjusted. That means the plus 2.5 in quarter 2, 2025 represented actual growth in consumption volume. People weren't just paying higher prices, they were also buying more. So there you go. I thought this might have been bad numbers that actually looked better than what they were. But according to the breakdown, these are real GDP numbers, and people did spend more, not just pay more. So did buy more goods, not just pay more money. There you go. So that's the bottom line on that. What does this mean for the rate cuts, guys? It means that we're likely going to see some pushback on getting rate cuts. Yesterday, this thing was in the 90s. This morning, when AIXBT pulled it up, it was 88. Guys, it's now 83.4. We're looking at a 16.6% chance now that October sees a rate pause and does not get a rate cut. Continued to monitor this. This is the CME Group's FedWatch tool, if you don't know. So we are seeing the slowdown on the push for another rate cut happening in October. And when you have the labor market showing that it's not weakening as much, and you have the GDP and the economy showing that people are starting to push money back in, who knows? May not get a rate cut in October. Day trading. We got any day traders out there? You guys might want to know about this. Matter of fact, we'll bring OC up on this. OC, if you don't know, here's the problem with day trading. If I want to day trade and I'm not some, big rich person on the market, if I want to day trade, I have to have $25,000 in my equity account in order to day trade, meaning I can do more than 3 trades per day, right? $25,000, I have to have it sitting there. Look at my cash, bro. And then they'll let me day trade. This article, I'm going to get to that question in a second, BC and Wick's wife, sorry. Day trading is about to get easier for smaller retail investors, guys. This just changed. Financial Industry Regulatory Authority has approved amendments that would replace the longstanding $25,000 minimum equity rule for pattern day trading. Regulators are moving to dismantle one of the most controversial barriers for active retail traders, the $25,000 minimum. No longer needed. It's actually going to be based on this. And I said, okay, look, let's break it down. Give me the down and dirty here, Pam. And she did rule change explanation. Key difference here. There we go. Scenario setup. Account equity, I have $5,000, not $25,000. Broker margin required for Tesla, for example, is 25% intraday. Stock price, $250 per share. On the old rule, I can only make 3 day trades per 5 business days. If I attempted a 4th trade, I'd be restricted if my count was under $25,000. And doesn't matter how safe or risky the trade is, it's a fixed rule. With $5,000, you can't legally be a true active day trader. Under this new rule, you can trade as often as you like. Buying power depends on the margin requirements, not some arbitrary $25,000 level. So you would say, I have $5,000 in equity with a 25% margin requirement. My max position would equal 5,000 divided by 0.25, which would be $20,000. And shares I would be able to buy, if it's $250 per share, 80 shares, buy and sell. And I could do this all day long, no problem as long as my numbers come into under that amount. So if you buy 80 shares of Tesla at 250, $20,000 position size, Tesla rate rises to 255 the same day, profits 255 minus 250, 80 shares, $400. You sell before the market closes, no overnight risk, and now you can be a day trader. So interesting to see that. I think we're going to see a lot more volatility though coming in on the stocks because now everybody's going to think they're a day trader, and good luck. Good luck. Bottom line, with 5K, instead of being forced into swing trades or saving up to $25,000, you could day trade Tesla all day long. Your cap is based on margin math, not that $25,000 cut there. Wix Wi Fine 89, aka 2Dub, if you don't know. She said, Piper, historically, how does the market react when the government shuts down? There have been whispers of another shutdown happening. We talked about this last week. Historically, the markets, they go kind of flat or pump. They don't really sell off during government shutdowns. So why is that? Government's not there at work to F it up. So yeah, it's true. It typically we see a better market. It doesn't really sell off. It just kind of either stays sideways as people just wait and see, or it pumps. So yeah, if we get a government shutdown, whatever. Go do your job, people. Go do your job. Only in the U.S. government can I say, you know what? I don't like the people I work with. I'm not going in. We can't get along and agree, and I'm just going to stop working, and it's okay. F you guys. F politicians. There you go. I think that's about all I had today on the day trade. No, there's this here. I want to talk about this, and then we'll come back and talk about it. This is that $90,000 target that we were talking about, OC. Kind of on the thumbnail. Maybe we should talk about it. Bitcoin ETFs enter slowdown phases. Are bears hunting for the $90,000 Bitcoin price? Let's go down here and see what it's saying. 108,000 is a short-term target for bears, with some Bitcoin analysts predicting a drop to 90,000. Bitcoin sellers emerged on Thursday as the drop to $111,000 sparked fears that a further correction towards $90,000 is on the horizon. Bitcoin ETF demand has been weakening. Institutional investors getting out and taking their profits there. Inflows from the Bitcoin ETFs cooled after strong inflows at the beginning of September. Net inflows fell 54% to $931, $931.4 million, last week, from the 2.03 billion the week prior. So pretty harsh cut back there. While overall accumulation remains intact, the slowdown suggests a pause in institutional demand. The on-chain data provider said in an X post on yesterday. Such behavior stands out versus September, when steady price increases accompanied healthy inflows, but now we're seeing some outflows. And I want to come back over here to this chart and take a look at that, because this guy here has got some worst case scenarios. If we somehow get a recession, could be even lower. Okay, and so let's take a look at the chart here. Let's zoom away from that chart. Sir, you're way too close. I'm gonna need you to back up. So you can see here, he's got some levels here, and there's volume running here. You guys see all of this support here? That's that level he's talking about there. That would put it like $90,000. He's thinking that 108 here is where we get all of this support from and get the bounce. OC's talked about that, but he's saying worst case scenario, we could actually see down here in the $70,000 to $75,000 range. Let's go and take a look at this actual chart and see how that looks. There we go. Come back, baby, come back. I know Alexander G is already typing in the chat right now on that one. So he said, I give the green line a 15% probability. He thinks it's about 15% that we come down to that 105, 107 range and hold. He thinks it's a 60% that we go down to our previous support level down at 90,000, red line 20%. And then if we hit a recession all the way down, he thinks 5% chance that we see 50K. I'm thinking $90,000 is not a far crazy prediction, OC. I'd love to hear your thoughts on that, and then I'll jump in and we'll take a look at the bull market support band. We'll talk about that 52-week SMA, and then we'll see if we have time for some alts to get in there, maybe some gold. But your thoughts on this 90,000, 108,000, 15% chance. Your thoughts on that?
I think that it is more than possible. I mean, I even give it a little more of a possibility. That's what liquidity is at, right? In fact, if you guys just remember, we were talking about the debt, kind of death, right? I mean, going through 108, 106, here it is, and basically 103. And these boxes are where the liquidity is residing. I know, look at this. We have an order block liquidity boxes right here. We have predictive ranges. We have gaps on the VRVP. I mean, the lack of or the volume is not here to sustain the strength of the movement, and the lack of the volume created by the gaps in the VRVP, based on also the liquidity zones that we're seeing, well, then it calls for that zone. So I would actually give it a little bit higher opportunity. So 90 something, I would say, yeah, maybe more closer to 106, 108.
Which he's got both of those in there. So let's go over and talk about that. Let's jump in there and take a look at these levels here. Looking at the bull market support band, okay, we do have a daily dynamic reactor coming in here in the bull market support band. If you guys don't know, this is a 21-week EMA and the 20-week SMA. If you just put in 21 week and you'll see it right there. Bull market support band. Don't need anything special. Just throw it on. This is where we bounced, and I called this one. I said, look, if we hold this, then we're going to go higher. And that was where we were at back at the beginning of September, end of August, right? We talked about it when we were actually here coming down in mid-August. We bounced there. We're hitting again right now. I moved the box into the new level here because it was down here. And so now we moved on, and we're now here with this box. But if we don't hold this, we're looking at 98,000 here for the 52-week EMA, or yes, SMA, sorry, simple moving average. This is the 52-week simple moving average coming in right at $97,572. What about some of our other levels, though? Can we throw on those and see how that would look? Let's go there. And let's throw on the 100 and the 200. What are we looking at for those? Well, that 100 days coming in at $77,000. If we lose this level, very likely would head down to the 100, which would be in the ballpark of that $77,000. I know that sounds crazy, guys, but that is the facts of the reality of it all, is that can very easily happen. What's down at that level? Well, look, it's our previous low here. And if we take this in to account, let's throw on a fixed range volume profile here. I'm not trying to scare anybody. I just want you guys to all be prepared. Let's move this from there. Can you come back and get all of this from the bottom last time to now? Thank you. There we go. You can see right here, we're looking at $81,000 for a value area low setup. We'll lose that area. Volume node comes in. Look, we go into gaps. There's another one, 76,000. So volume gaps do tend to get fallen right through. And so right now, what we have is we have a level at about 104,000. That's a volume nipple right there. Let me stretch this out so you can see these nipples a bit better. Kind of like fine tuning your HBO with your fuzzy signal back in the day. If you know, you know. Look here, you can see we got this level about 104. That's a volume node. We go into a gap. We come in, point of control, right here on the 52-week simple moving average. That's going to be coming in about 97,000. We lose that. It's a drop again into another volume node that comes in at about 87,000, and then we lose that. Come in, next level is about 83,000. So these volume nodes are going to be very important levels for us to hold on Bitcoin going forward, or we could easily see some of these bearish scenarios that they're talking about in that article. Overall, though, guys, right now, only thing we need to worry about, did we get our DCA in for the week at a low level? I think we might have. And will this hold? Bottom side of this coming in about 109 on this, according to the bull market support bands here in the daily dynamic reactors. So that's what I've got there, OC. Let's kick it over to you. Let's talk about what you've got going on your chart. What are you seeing on these higher time frames? Anything that's giving you these bullish levels that we just need to hold on the critical side? And then let's take a look at, altcoins, gold, whatever you got, OC, throw it at us. But at the end of the day, guys, if this Russia stuff doesn't get cleaned up a little bit and it keeps expanding, geopolitical can just say F all the charts. So TA out the window, it's WW 3 times. So OC, what do you got for us on your chart, man?
Hopefully we don't get anything of that. I mean, nobody wants the WWs at this point. I mean, we already have 2. I don't know why we should have be having 2. All right, so let's bring up here Mr.
Third time's a charm, OC. Third time's a charm.
Dude, that doesn't ease me out at all, right? So that one tends to be the last
That's
one.
chunky.
All right, so.
That's chunky candles.
It's just speaking there. It's just speaking there. Just looking at you. There you go. So, all right, I actually rescued him from the chat, but let's take a look at here. Let's go to a cleaner chart here so we can see a little bit through the spaghetti. And of course, let me clear this up a little bit here. And this is gonna be it. Perfect. So areas that we need to hold. Well, 100K. That's it. Thank you guys. See you guys tomorrow. Just kidding, but yeah, in full honesty.
And that's the end of the show.
No, but in full honesty, this is the area that we need to hold, right? I mean, I know it's a little bit of a chunky area, right? Thus, chunky candles. It goes from 109 to 100K, right? If we start making lower lows in here, well, if you guys actually notice, we are creating kind of like a head and shoulders in here, right? So nobody wants to break this, I would say, neckline, right? And yes, of course, we could even go as low as 100K, but don't start putting down lows lower than 98, right? I mean, that is a little bit too bearish to start thinking about right now. Yes, it's a fact that we had a range. We have right here like a heartbeat ding right here, like beep beep, right? And we created a double top, a little Batman signal here. We're going for the second wing or the second shoulder, and well, then as you can see, we're going lower. Let me just bring up my order blocks in here and my predictive ranges, but let's get started with order blocks. Come on, where are your order blocks? And of course, they don't want to come out and play with me when I need them. But all right, let's just use predictive ranges and support and resistances. But you see that we do have a little gap in here. All right. Well, it's not a little, it's a big gap. And then, well, then the actual resistance comes in here on the previous resistance in 106, right? Starting on 107, 106. And remember, these areas change based on where we're looking at them. For example, right now we're on Binance. If we go lower, we get into Bybit or bluffing. And we've been talking about this for a long time. I mean, if you guys remember, look at our areas right in 102, right? 104. Whereas the liquidity right here is showing at 108, 107, slightly below Binance one, right? But as long as we hold the 99, the 100K, and well, we also have this other big trend line that calls for that low. So areas to hold, once again, 100K. If we're talking about right now, just holding it so we don't go lower, you might be a little bit disappointed because it is on right now. I mean, we just need to hold the 101 and 109, which is the actual target, and we're not making anywhere highs on our oscillator. Let's go take a look at a couple of other assets, like for example AIXBT. I was expecting a short. I was hunting a short with a little bit of that push up in here and then coming back down. Well, it did not work all going all the way up there. What a bummer. FARTCOIN, the same thing. I'm looking for a short on FARTCOIN, and I'm looking for a final push. I'm going to be changing this slightly higher to hunt maybe for an outlier like this, and then coming back down. Now that we're having this peak performance, that we could be having that little slight bullish hump in here on our oscillator. Let's go to PENGU, for example, and I was looking for that U shape, and it did play it out, but I was expecting it to go a little bit higher. But right now, look at this. We are reversing back, so I'm waiting for that retest continuation right here. And why not? Let's add our alert right now. So, well, the areas that we're going to be looking for are going to be somewhere around here. Let me just move in slightly below. There it is. And let's go even farther more. Let's check out CRV, because on CRV we were expecting a little bit higher here. And well, despite TP number 1 and TP number 2. TP number 1 was hit, TP number 2 was not. Well, then we rejected back below. Something that I do like right now about CRV is that we're making a higher low technically. All right, technical higher low. All right, it's not yet defined because we could be like, for example, in this candle and then have another one and then create a lower low, and then maybe continue the movement to the downside. As you can see, I was expecting a breakout continuation, but we're having the plan number B, which is just a rejection. So let's keep an eye on that rejection, because remember, on CRV, we were looking for the target somewhere right here at 0.54. That is a very good target. Finally, XRP short, let's go. This is the same thing that I am doing on Bitcoin. Remember, it stopped us out on the way up. We miscalculated the magnitude of the push, but then on its way back down, having acceptance back into the area right here, having the crossover to that peak performance, that reversal diamond crossing over the zero line. Well, then that's our short coming back down to a measured target, coming back up now. All right, and I'm not long in this area, but I'm gonna be trying to short continuation that area. So we'll see how that goes. So far, let me add another alert right here where I believe the dynamic corrector is going to go. And I want to go over one more, which is BNB. And BNB, well, despite it was looking strong in here, having that range, we lost the range. We're having a lower high. We're coming back up, and we need to be careful with this high, especially. And come on, if my indicators want to work right now, and that is trading bits been a little wonky recently. Don't know what's up with it, but let's just try to refresh them. Come on, there it is. All right, especially having this, and I was just slightly bit off right here, having our resistance in here and our dynamic reactor coming strong. Not only that, an automated trend line passing over to the same zone. So we have three stuff in here: a trend line, resistance, dynamic reactor on a rejection area. So let's add a alert in here. And of course, we're going to be preparing for that possible short scenario. As you can see, I tend to push my alerts a little bit lower on where I actually want to long and or short it. Let's go to Link, because look at Link. Finally, boom, shakalaka. Here we go. We were having a 1 quarter of a trade in here. Yep, and then another quarter of a trade here. It started going upwards, right? Trying to hit our secondary entry. That would have been a fantastic entry, but still went down. Well, it hit our predicted target. We're bouncing back up, all right? And we're going. If you're late to this trade, don't worry. This is your re-entry zone. Let me just, for a sake of my mental health, let's clean this up. Perfect. And let's just keep it as is. All right. So, by the way, let me adjust this. And our next target will be right here. We have it at 1987. But your reentry could be found right here, as within BNB. Remember, we have dynamic reactor, predictive resistance. In this case, we're missing the trend line, but we still have 3 points of confluence right here. And seems like we might have a pattern continuation right here and a possible rejection. Important on our oscillator, seems bullish, seems strong, all right, but the money flow is not there. So yes, we have bullish divergence, and that will take us maybe here. For the worst case scenario, I would say maybe fake out to these areas, like in here. All right, so be careful with this one still, and look for your flip of the ribbon. And just to finalize, I want to go to Hyperliquid. We were talking about Hyperliquid on Gaming with OC, and well, I actually got pumped on it. And let's take a look at how is it going. All right, so right now it's been a real drop on Hyperliquid 30 minutes. Let's go to the 4 hours. We can see that it's been going strongly to the downside, and that is a good thing that I want to see, because that means that we're going to hunt for that liquidity, right? So if I bring this up really quickly, we'll see that we are getting to the first rejection zone. I will be waiting for another area to short it, and finally get a long right there on hyper liquid. So
and
let's
I
try
want
to
to
do.
talk about that chart while you got it up there too, guys. A lot of this money from Hyper that's flooded out has gone to Aster. Okay. When
Of course.
Aster starts to pull back and people start to realize it's not as good of a DeFi exchange as Hyperliquid is. Hyperliquid's got better. Hyperliquid has a better token buy program where their fees get turned back into Hyper, some of it, and so it reinforces the valuation of Hyper. They buy more of it. When that happens, I think you will see Hyper reabsorb a lot of that sell-off that happened and slingshot. So pay close attention to this here, what OC's saying. So
Thank you, Piper. So right here, being basically an absolute zero, remember that I call the absolute zero, it is the area that it's basically inert or haven't been broken since a long, long time, right? Being sub-zero will be very dangerous, right? But the absolute zero, I see that is somewhere around the 36,600, and that's where we're aiming slightly above. Not to open up a trade and walk away, but set your alerts and try to hunt a better price. All right, so that's why we get this like this. Something important is that I'm looking for that rebound to then a further continuation, squeeze a little bit of that short out, and then finally bounce it up. And I'm just aiming here because that is my main target. But I mean, we could get back at whatever dynamic reactor is at. And remember that we could be doing something like that. All right. So still, I cannot give you a predicted target because I don't know how that dynamic reactor is going to be behaving exactly. But I believe that we could be hitting the $48.47, which is going to be, let's measure that, a best case scenario target at a 30% no leverage. If you do use a 10x, you will be talking about a 300%. But you also need to remember that we take early profits and we scale that down as we go up. So it's not a full 300%, but pretty close. So that's what I got so far, Piper.
Nope. Nope. Bit Innuendo asked, he said, can we please take a look at gold? Thanks, because I love gold.
Perfect. All right. So this is gold. And throwing it back to you, Piper. Not just kidding, of course. I mean, I need to cut this out.
This
Too many
guy's
times
got
already.
jokes.
All right, so
Mexican comedians love them.
That was my breakfast. Clown. I took clown for breakfast. All right, so this is the trend line that we're having right now. We're ranging down. I like to say this. This is your opportunity entry if you haven't jumped in. This is not a financial advice, of course. All right, and this is just calling out a good area of re-entry. All right, regardless if this goes to zero, which is not going to, right? A good area of re-entry is at a trend line. All right, so that is just a fact. So looking for that possible trend line retracement, I believe that we're going to be doing the same pattern here that we extend here. Maybe we have a fake out somewhere around here, visiting other lows, and then we'll need to see how that goes. So I will actually start looking at this area right here, which is 3,700. All right. And after looking at that area, let me just clean this up, 3,700, looking at my oscillator. And I want to look at, for example, my volume matrix on that zone. And why is that? Look at how the volume matrix oscillates up, down, and look at this. This is my entry spot, and this is going to be my next taking profits, or at least my holding, like, hey, keep holding, don't worry about it zone. All right, so that will put us somewhere in, there we go, this area somewhere around here for support as a little fake out. But if we're faking out in gold, most likely we're going to hit the 3,653. Long story short, first area of entry 3,700, second area of entry 3,640. And I think we're going to keep pushing upwards.
Awesome. Fantastic. Guys, we had a question here. I know, OC, you got to get going. You got a class on Chart Prime, so I'll go ahead and let you hop out of here. Appreciate your TA, bro, but I got to address a couple of things in the chat here from BC and Lunar Beaches. So, OC, we'll catch you later, bro. Make sure you guys tune into OC, 8 p.m. Eastern Standard Time. He's going to be breaking it all down for you right there on that 8 p.m. right here. Eastern Standard Time on Piper Academy. Appreciate you, OC. Have a good one, bro. Guys, I had a question about the stagflation from Lunar Beaches, and then BC Port Corp, of course, he made a comment. Let me see if I can find it and bring it up here. He made a comment about, he was talking about stagflation. Yeah, there it is. I found it right there. He got told he was insane and a bad financial analyst for warning people about stagflation and recession warnings. Guys, we did get data today, and the data was not bad data, but Texas MC, TXMC, did a really good job of breaking it down here. He said that smoking GDP was almost entirely net export. So he did all the math here. Contributions to percent change in real gross domestic product, personal consumption expenditures was only 1.68, okay? Contributions to personal change in real GDP government consumption was negative 0.01. Contributions to percent change in real gross domestic GDP products net exports was 4.95. Contributions to that percent change of the GDP for gross private domestic investments was negative 2.66. Real gross domestic product came in total at 3.8. So a big chunk of this was net export. Net export growth means consumption is weak, and it also is the result of a weaker dollar. So yes, better than expected, but not fully, cleaning house with this. This is not reversing anything. We still have stagflation going on. So there you go, guys. Appreciate everyone being here. We are about to head over to Dano Crypto. He said, don't miss this opportunity. And he may be right. Like I told you this morning, I bought this morning. I picked up in that golden pocket. That chart currently, right now, we'll jump over there before we head over to Dano Crypto. We did get our bounce in our golden pocket here. So keep an eye on this level right here at about 111,000, 112,000. That is going to be our quantum reactor, and we are at the value area low. So if we do get a sell-off here, this will continue on down and head into that 109, 108. But don't miss opportunities when they knock at your door. You might want to go look at the ring camera, see who it is, and then jump on that. Dollar cost averaging, the dynamic way, the Piper plan way is winning. And so I love it. So heading over to Crypto Dano. When you guys get over there, drop the graduation caps. DDT, I saw you make a comment about height being better and that it's got better, less slippage and all that. Absolutely. Appreciate it, man. And we will catch you guys back here tomorrow morning, 10 a.m. Don't forget, tune in to, like I said, OC this evening, 8 p.m. Eastern Standard Time tomorrow morning. Good morning, crypto. Hopefully, BC Port Corp's back is feeling better. Shout out to you, man. I hope that you feel better, man. I'm at the age where I pick up a pin wrong and I can throw out my back. So I feel you there. And we'll be back at 10 a.m. breaking down the news, the charts, the markets, and everything you need to have knowledge, because knowledge is profit. Tomorrow morning, we're going to be getting some data coming in, core PCE and personal income, bright and early. So make sure you're over there at AIXBT Crypto Show. He's going to be live while that data comes out, and we will catch you guys later. Until next time, trade safe, use some risk management, peace, love, profits. Be kind to yourself, be kind to others. Later, guys.
That's the rap. Chart stack data never lie. Piper led the mission, OC in the sky. Spaghetti on the screen, but the vision stay prime. Chart prime visual, signals on time. Alumni strong, we built from the grind. Lessons in the market that'll outlive time. Knowledge is profit, you know how we run. Till the next one, stay sharp, get it done.
You can't handle the truth. Emotional damage.
We'll see you at the next
They don't
one.
know what the fuck they're doing.
Morning market report out. 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 Out.
Boom shakalaka.
We'll see you at the next one. Morning market report out. We'll see you at the next one. Morning market report. Ow.
That was awesome, dude.
Hey, it didn't break. What else you got?